it can be helpful to change the settings of how the balance of power indicator is displayed to histogram bars instead of the usual default line setting. This makes certain movements easier to see. And since the balance of power constantly changes between bearish and bullish, it can be helpful to use it in a short-term context when price could potentially break through a defined range. As price nears the top of this range, a more decisive break higher can be identified when price closes above the resistance line and the balance of power remains positive, realistically only for a short time, because even with a strong break higher like this, it will be normal for volatility and slight selling pressure to emerge in the short term, even though price can still move higher. Though usually when the indicator goes back under zero, the strongest part of the initial breakout is normally over. And in the context of an uptrend, neutral to bearish movement becomes more likely, especially if the balance of power can't get back into positive territory for at least a few bars in a row. Strong upswings or bullish retracements can be more easily identified when price continually closes higher and the balance of power indicator shows a similar situation with several positive bars in a row. For the potential of a gap down fill, mark a short-term area of resistance near the gap down price, and as price rises to fill in the gap, we look for those same characteristics. A close over the short-term resistance line, which in this case is 1325, and this bullish move will be relatively strong as long as the indicator remains positive. And once values of the balance of power go back under zero, a bearish reversal is not imminent, but the strongest bullish part is definitely over. After that first bar back under zero, usually price will have hit some major resistance area. In this case, the gap has been filled. Price is much more likely to go neutral to even slightly bearish, while at the same time the indicator can constantly shift above and below zero. When a group of candles constantly overlap the same price range, especially at a well-defined support area, it can be treated like a small bullish reversal range, similar to what we saw at the beginning of this example. Again, we look for price to continually close over the upper boundary while the indicator remains at positive values. And as usual, the strongest part of the bullish breakout is over once values return back under zero. And it's not much of a surprise that this takes place when price returns back to this major resistance area to halt the advance higher with at least some short-term neutral movement. However, unlike the previous instances, there's a large breakout higher to continue the development of this uptrend further. This kind of breakout for a bullish continuation will display similar characteristics to what we've seen before. In this case, there's a small but significant difference. When there's that first bar back under zero following the initial breakout higher, the uptrend doesn't weaken as much since it barely goes under zero and only happens for one bar. Even though the following few bars go back over zero and price continually closes higher, this small dip back under zero has an impact nonetheless.